Imagine standing at the brink of your first big investment. Your heart is pounding, you're unsure whether you're making the right financial moves. Fear of navigating the complex world of multifamily financing can be completely overwhelming. But don't worry, you're not alone. In this video, we're gonna demystify the entire process, guiding you step by step to transform that fear into confidence. So let's start your journey. My name is Stacy. Welcome to the RMFI Academy, where we empower working professionals to achieve financial autonomy through multifamily real estate investing. So let's dive right in. Let's start with talking about why multifamily financing. I feel like most people probably know this, but just in case, if you have a big wad of cash and you want to go buy a property, are you going to take all of your cash and sink it into that one property? No, you want to leverage your money. You want your money to go further. Well, the way that we do that is by using financing. So in the world of multifamily, depending on whether you're going 2 to 4 units or 5+, there's going to be different down payments, and we're going to talk about that in just a minute. But you're going to get between 65 and 80% loan to value from the bank. And you're putting down the down payment, which means if you have a set amount of money, instead of putting all on one property, you could put some on this one, some on this one, some on this one, some on this one, and get 4 properties instead of just one. So the whole idea of financing is to leverage the capital you have to get as many assets as you can to increase your cash flow so that ultimately you can retire from your JOB. If you're just getting started and you're trying to buy your first duplex or triplex, you're going to use residential financing. It's pretty much the same as what you get if you're getting a single family home. No different. They're going to look at your personal credit score, all of your personal information, etc. On the other side of it, commercial financing is for anything that is 5 or more units. That's just where the cutoff is when it comes to financing, whether it's residential or commercial. So when you get to 5+ and you're working with commercial, it's an entirely different world. And we're going to focus mostly on that during this video so that you can feel empowered and really not be so afraid of getting started in apartments. It's really 5 units. That's not that much more than 4 units, right? One more unit. But it's an entirely different game, and that's what we're going to prepare you to play today. All right, so let's talk about how you get prepared. You know, one of the things that's a really big misconception is that credit score is the end all be all. Look, when it comes to commercial financing, it's not that they're not going to look. They want to see that you're credit worthy, but they're not basing their financing decision on your credit score. So continue to do everything you can to have a credit score as high as possible, but don't stress about it if you don't have the best credit score. Worst case scenario, you might get a little bit less favorable terms. That's very different than residential, where it really is dependent on you, your job, and your credit score. So in the world of commercial, there's certain documents that you want to have prepared when you're getting ready to apply for a loan. And let me tell you a little secret here. There is a key to getting your properties financed the fastest and having the banker come back to you and say, oh my gosh, when can we do this again? And I'm going to teach you that secret right now. So one of the things that's common for brand new investors when they're getting that first loan for that first apartment building, holy cow, like it feels like so much information, you're totally overwhelmed. And when you come across like that to the lender, they're a little bit nervous about lending to you. So here's what you're going to do instead to look like the consummate professional that you are, even if it's your very first deal. And actually, what I'm about to tell you could be used for 2 to 4 units or apartments, but it's going to be a game changer. So before you're even like writing offers or getting too far into the process, if you can pull together the following documents that I'm about to tell you and put it in a Google Drive and have it all organized, you're going to look like a rock star. But the types of things you want to have available and have ready to go are things like you want the last 2 years tax returns. So let's just say you're in the middle of filing your tax and you haven't done it yet. What that lender is going to need to see is that you filed an extension. The whole point of what they're asking for is to make sure that you're not going to have some lien with the IRS that they're going to have to deal with. All right, so you want to make sure you have at least the last 2 years tax returns. And look, if you have other LLCs or other businesses, they're going to want to see those too. So just go grab the PDFs of those, put it in that Google Drive, label it super clearly. Like if it's your personal, your last name, the year, 1040. If it's your business name and the year. And that way it's super easy for the bank when they're looking at all your documents to identify what they have and what they need. Another thing you want to have ready is your driver's license. That sounds crazy, but I'm serious. Front and back of your driver's license, just have a picture, put it in the Google Drive because sometimes they ask. Another big one, which is probably the biggest one of all, is your personal financial statement. You might hear people refer to it as a 1003, and that's really just because it's a form and the form number is 1003. Now, every bank is not going to require that exact form, like the 1003 form, but they are going to require all that information. So the best thing that you can do that's going to save you a ton of time and stress when you are actually applying for a loan is you can just download that 1003 right from the internet and start filling it out. They're going to be looking for information on there that's going to show them what your net worth is. So they're going to have a list of assets, they're going to have a list of liabilities, and then they're going to want to know what your payments are, things like that. So sometimes, depending on how long you've been alive or doing business, you're going to have a lot of different things that you have to look up. So that's not something you want to be doing when you're right in the middle of a deal. So if you already have real estate, they're going to ask for a schedule of real estate owned. And they're going to want to see things like, what is the address? What is the value of the property? How much do you own the property? When did you buy it? What are the monthly rents? What are the expenses? So every lender is a little bit different in what they ask. So if you can prepare your own Excel spreadsheet, your schedule of real estate owned with every possible thing that they could want, when the time comes and you need to fill out their form, you simply pull yours up, fill it in, no big deal, super easy, super fast. At the property level, they're going to want to see things like the rent roll, the T12. What's a T12? It's basically a trailing 12-month financial statement so that you could look every single month and see what was the revenue, what were the expenses, and what expenses were here in January, what was there in October, because sometimes there's certain expenses that are seasonal. So the whole idea is the lender is looking at financing this deal just like they would a business. You're buying a business. The business just happens to be an apartment building or a multifamily property. So the more information you can have ready to go so that when they say, okay, we're interested, you give that information to them, it's going to make your life a lot easier. Here's another tip. When you are preparing all the documents to send to that lender that first time, if you can basically emulate the way that they asked your question. So if they give you a list of items and they said, number 1, your driver's license, number 2, tax returns, number 3, bank statements. Oh yeah, bank statements. That's another one you're going to want. When you send back those documents, if you will wait until you have everything, which doing it ahead of time will make that more possible, when you go to reply, you're literally going to attach your documents in the same exact order that they had asked for them in. And you're going to label them the same exact way that they labeled them in the email that they had sent you. And look, I have had feedback after feedback from so many different lenders over time who are like, this has never been so easy. Like, thank you. And it's just because I learned really early on, the easier I can make it for the bank, the better chance I have of getting approved and getting favorable terms. All right, let's talk about down payment. So if you're talking about residential multifamily, 2 to 4 units, you're probably going to get somewhere between 75 and 80% loan to value. Loan to value simply means, let's say you're purchasing a property for $200,000 and you were getting an 80% LTV, loan to value. That means you're getting a loan for 80% of the purchase price. So in that case, $160,000. Now, when you get into commercial, so 5+ units, the bank tends to go lower with the loan to value. And the reason is that when they look at loaning on a particular property, what they're really worried about is, if we ever get this property back, how easily can we offload it? There's not that many buyers for apartment buildings. It might seem like it because you're all about it, you're learning about it, so it seems like everybody's into it. But the reality is you're a very, very tiny, small fraction of society. You're on your way up. But look, they're looking at this saying, well, there's not that many buyers compared to the population for this apartment building. There's more buyers for 2 to 4 unit, and there's tons of buyers for single family. So when it comes to apartment buildings, they're a little bit more risky because they don't have anyone to sell it to, or they don't have as many people to sell the properties to if anything went wrong. So here's the deal. They're going to probably finance somewhere between 60 and 75% of the purchase price, which means you're putting a large down payment. So maybe on a triplex, you might put down 20 or 25%. On a larger property, you might end up putting anywhere between 25 and 40% down. All right, now what about where does that money come from? Now, this is an area that really tends to hang new people up because you think that the money has to be all yours. Listen, it does need to be liquid. Could you technically go take a HELOC on your house and use that as a down payment? Technically, yes. But the reality is at that point that you have 100% leverage on the property. And although that sounds amazing from an ROI standpoint, the reality is if things get tough, you don't want to be in that position. So I would all day long rather you partner with someone else who can put up the capital than go into further debt to finance the down payment. So if you have your own capital, your own cash, you can absolutely use that. And if not, Trust me, there are so many people that would love to get into a multifamily deal and they just don't have time, or they're not the ones taking time to learn the way that you are. They would love to own a multifamily property. You are the solution for that. So if you find a 10-unit apartment building and you need $300,000 down, but you only have $100,000, you're going to look for a partner who has $200,000, or maybe two partners with $100,000 each. Don't let yourself get hung up about the down payment, because the reality is this is a team sport. When you start getting into multifamily, particularly apartments, it's very, very common for the deals to be done through partnerships and joint ventures, simply because of how much capital it requires. All right, next let's talk a little bit about the types of multifamily loans out there. So there's residential loans and there are commercial loans. And just like residential loans go with residential properties, 2 to 4 units. Commercial goes with 5+ units. So when you are getting a loan for multifamily, it is going to depend on which level of multifamily you're doing. If you're doing something that is 5+ units, you are going to focus on lenders that make commercial loans, because someone who only makes residential loans, they literally cannot lend on something that is 5 or more units because they don't have the right loan products. So when you're getting a commercial loan, gosh, you can find a lot of commercial lenders out there. They don't always have the word commercial in their name, but you could look at small community banks. You can look at credit unions. You can just Google commercial banks in whatever city. You can go to a mortgage broker. But the whole idea that you need to be aware of is that commercial lending, commercial banks are sometimes a completely different animal than just your Wells Fargo down the street. Now, one of the things that is just true, like we invest in real estate all over the country. Anytime you're able to connect with a local lender, local to that market, I am telling you what, the level of flexibility and what they'll do is so much better than when you're dealing with a national lender. Now, sometimes the only ones you have access to is the national lender. But I'm telling you, if you'll take a little bit more time and go deep into that market and find those small community banks, you'll be surprised at just how much they can do. And it's things like they could loan more money, or they can do a lower interest rate, or they can be more flexible, or they can give you a certain amount of time that's interest only. The level of flexibility is a lot greater because they aren't reporting up 32 channels of approvals, right? It's just that small community bank, their little group of people saying yes or no. Okay, I don't want to forget to tell you guys that we have so many great resources for you. If you go to www.warriorsofwealth.com, I have 8 of my favorite masterclasses that I've taught on everything related to multifamily. You can go there. We've made it free. We just want you to move forward with your journey. So go check that out. All right, let's talk about seller financing for just a moment. What the heck is seller financing? Well, if you know about seller financing, then you're like, ooh, let's talk more about it. Heck yes. So seller financing is when the seller basically either owes nothing on the property, or they have a loan in place that's a lower interest rate, and they're willing to basically be the bank for you. So I'll give you an example of this. This is a deal we just did a couple of months ago. Total seller financing. The seller was 89 years old, like very savvy 89-year-old business guy. But he's like, it's time for me to sell. He wanted to leave a legacy of cash flow for his family. He had already paid off the property, so he agreed to be our bank. We put down 25% of the down payment. So that purchase price was $705,000. So we put down 25%. And every month when we make the payment, we're making the payment to him, not to Wells Fargo, not to Bank of America, not to some community bank. And it's such a win-win because, one, we didn't have to go through all the underwriting that we do when you go through a commercial lender. And the benefit to him is that he gets a monthly recurring cash flow, and it saves him a bunch of taxes as well. We can talk more about that on another video. All right, now let's just talk about the 2 main strategies, right? We have stabilized and we have value add. The stabilized properties are the ones where there's already tenants in there, there's already renters, it's already operating. Like you buy it and you cash flow day one. Value add is when you're going through and you're either rehabbing or you're changing the management, you're getting rid of the tenants that are bad and you're fixing up the units and putting new people in there. There can be a whole lot of things that you're doing, or you go and reduce the expenses. These are value add. Well, when you're doing a value add deal that has a lot of rehab, conventional banks, commercial banks, they don't love those because they prefer the safer one, which is you cash flowing from day one. So sometimes you're going to need to get a loan that's called a bridge to perm. It stands for bridge to permanent, where the first year, 12 months to 24 months, depending on how much rehab, is going to be interest only and probably at a higher interest rate because at that point, the deal is more risky for the bank. But the bridge to perm, basically you have all your terms already figured out. So you know that as soon as the rehab is done, you basically let the lender know, okay, we're done. They verify it, and then it switches to your permanent loan. But all of that is negotiated in the beginning. All right, now let's talk about applying for the multifamily loan. And look, don't freak out. This is one of the things that feels so scary. The thing you need to remember is that banks want to loan money to you. They don't make money if they don't loan it out. So right now you feel like, oh, they have it and they're going to say yes or no. And it brings up all these old wounds of, oh, am I going to get rejected? You got to throw that out and just recognize it's a simple business transaction. So when you're applying for a multifamily loan, you need to step into a different state and be confident that you're going to put your best foot forward. And every time you do this, you're going to get better and better and better. So anyway, when you're choosing a lender, here's the thing I want you to do. I know that very first phone call, you're going to probably be nauseous, to be sick to your stomach. It's totally normal. So if you feel like that, don't think you're the only one. That's like 95% of people, but you have to do it anyway, right? You've decided you want more in life. So you're going to do more. You're going to be more, which means you're going to face the fear and you're going to do it anyway. So what I want you to do is I want you to find 10 lenders. Ideally, you'll find different ones. Like you'll find a couple of community banks, like small local banks, maybe a mortgage broker. You might call some national commercial banks. So I want you to call 10. And I want you to ask the questions of, how do they base their loan decision? What loan to value? What size properties do they loan on? What their application process is going to look like? The thing that you're going to find is that when you call 10 different lenders, you're going to find that 10 different lenders have 10 different things that they want from you. And so not only is that going to start to diminish the whole fear, because once you've called 10, you're going to be like, oh, it's the easiest thing in the world, no problem. So it's a way to just quickly get rid of that fear so you can powerfully move forward. And look, one lender might have the product that is exactly what you need, but that might have been lender number 10. So do yourself a favor and make those calls, because you're going to narrow it down from 10 to 2 or 3 that will be the best fit for you. And then you're going to narrow it down further based on what their actual terms are. All right, let's talk about the actual loan application process. Even this is going to be different from lender to lender. So let me just give you an overview of what it's going to look like. The lender is going to send you an email that says, these are all the things that we need. Some of them will just say, send you a personal financial statement and these 3 other things. Some of them will say, fill out this form. And basically it's a personal financial statement. It's a schedule of real estate owned, but some lenders need it to be on their forms. So no matter what, the first thing you need to do is just take a deep breath, look at what their requirements are, and simply go get all of those documents. And if there's anything that's not complete, focus on getting it complete. Do not send the email back until you have everything. Unless it's going to be something that's going to take more than a couple of days to get, then you'll get everything else together and you'll let them know this one document I will have by whatever date. All right, so that's the very first thing you do is get them all the information. There's not that much to applying for the loan. They're going to want to know about the property. They're going to want to know about you. Are they going to pull your credit? Probably. Does that mean it's going to make or break the loan? Unlikely. Usually what banks are looking for when you're getting a commercial loan and they pull your credit or they do a background check, they're just looking to see if there's been anything that is so egregious that the risk of loaning to you is just going to be too high. So the other thing that's a little bit different about commercial financing in a good way is that most commercial lenders are going to lend to your LLC. They're not actually loaning the money to you. They're loaning it to your business. And the benefit of that is that it doesn't show up on your personal credit. So, when you're doing residential and you're getting a residential loan, you can only get so many loans, before the banks are like, no, we're not giving you any more loans, because they can see it right on your credit. When you're doing a commercial loan, that stuff doesn't show up on your credit. All right, so you've sent everything to them and you're like, okay, what's going to happen? What's going to happen? Here's the reality. Your file is in a pile of other files. Not that you want to be the squeaky wheel, but you kind of want to be the squeaky wheel. So just set a cadence that you're just checking in politely, like, hey, just wanted to check in. Is there anything else that you need from me? And no matter how great you are, I will just prepare you for this. At the 11th hour, when you think everything's done, everything's been done for weeks now, it's 2 hours before closing, and the lender's like, oh, wait, we need these 2 other things. It's very likely you already even provided it for them. And if you've done that, just simply provide it for them again. And sometimes it's the first time you're hearing of it. So I just wish somebody would have told me that. And you just have to be ready to give them things at the last minute. The application process itself, there's not that much to it. It's give them the stuff that they want. They're going to ask questions. You're going to answer them. But you just want to stay on top of it. The thing that you never want to do is you don't want to assume that because you've turned everything in, someone is taking your file and taking care of it, because nobody loves your baby more than you love your baby. Your baby is in a pile of other babies, right? That's not good. So you want to be the one that's really managing and making sure that things are moving along. Do they need anything, etc. All right. That scary word we hear sometimes, underwriting. This is where the underwriters, the ones that cross all the T's and dot all the I's, and they're like looking at everything and they're adding things up. These are the scary people. But here's the deal, they're not scary people. Everyone is afraid of the underwriters because a lot of times when you hear about deals falling apart, it fell apart during underwriting. Well, what is underwriting? Underwriting is when your whole file goes back and they're looking through everything. They're basically just doing due diligence. If you could be super organized in the way that you have labeled your documents, the same way that they've done it, if you send everything in the order, oh my God, the underwriters are going to love you. You are their best friend because they have so many things to go through. And when they have to dig and dig and dig through things, the chance of them getting through anytime fast, it's going to go down, down, down. Make it easy for them. But really all that underwriting is someone making sure that everything that you've said, that you've presented is true. So just make sure you're telling the truth. Underwriting is just something that's part of every deal. It's just the lender is going to make sure that someone who's really detail oriented has looked at everything and made sure that there's no risks that they haven't assessed. All right, let's talk about negotiations for just a minute. Sometimes people think, well, you can't really negotiate your terms with the lender. That's sort of true, but here's the deal. If you go and you call 10 lenders and you identify 3 that would be a great fit for this deal, you're going to get each of those banks to give you a term sheet. And then you are going to compare term sheet, term sheet, term sheet, and you're going to find the one that is the best for you. Or it might be that, oh, I like this part of this one and this part of this one and this part of this one. What you can do is you can go to Bank A and say, well, I really would like to do business with you, but Bank C actually is giving me a higher loan to value. Is there anything you can do there? Because I'd really like to be able to go forward with you, build a relationship, buy multiple properties with you. But the reality is they're giving me a higher loan and that serves my purposes. So when you're talking about negotiating, that's really what it is. It's not a matter of, can you do better than that? You're going to have to show them that somebody else has already offered to do better. But that's your leverage. And if you just tell them, that's one thing. But if you show them, that's an entirely different thing. And that is where your leverage is for negotiating. And look, if this is your first deal, and I'm guessing it probably is if you're watching this video, when it's your first deal, you don't have a lot of leverage at that point because you haven't yet proven yourself as a closer. So don't be offended and don't be upset if they say no, but also don't miss out on the opportunity to at least ask because sometimes you're going to be surprised. Just know as you go further and further into your career, it's going to get so much easier because the banks already know you're a performer, you're a closer, and they're willing to give you more of a loan or a lower interest rate or have more favorable terms because you as an operator are a lower risk because now you're experienced. All right, so when you're getting closer to closing day, your title company is going to give you a settlement statement. I'm telling you something right now. I don't know that I've ever in 20 years had a settlement statement that was right the first time. So you have to look at it and you could look at every single line. And if you don't understand anything, ask. Don't ever worry about being the one that has to know everything. The reason that you can ask me literally any question when it comes to real estate investing and I can answer you, it's because I was such an avid question asker, especially my first few years. So every time I was doing a closing, I'm like, well, what's this fee? I've never seen this before. What's this? So some of those things that you're going to be looking for when it comes to the financing part is the amount that the bank is charging you, because sometimes they'll charge you a point or a couple of points for the deal. Is it what they had agreed to? Sometimes when you get to the closing, you're looking at it and going, wait a second, this is not what we had discussed. So you need to go back to your term sheet and go to the lender and say, hold on, we had agreed to 0.75 point, not 1.5 points. So you want to look for every single thing and just make sure it's right. One of the biggest mistakes that new investors make, especially on their first few closings, is assuming that because you're dealing with professionals, professional lender, professional closing company, or professional title company, that everyone there is going to be meticulously correct. I can promise you that is the opposite of true. You have to be the one to make sure everything is right. So you're looking at what are the points? What are the things did they charge? And is this the first time you're seeing it or hearing about it? Because if so, you go back and you fight for that. This is where you can negotiate with your lender. If they're giving you fees that you've never seen before, you hadn't discussed, that is no bueno. And you're going to go back to them. And I want to tell you something that it hasn't come up very often. And the first time it came up was 2004. Like, this is forever ago. But it's called yield spread premium. So I specifically want you to look for that. And it's not in the numbers. It's like off to the side in the words. Yield spread premium is it's usually when you're using a mortgage broker, when your mortgage broker is getting paid a fee for you to accept a higher interest rate. Look, if you're doing a fix and flip, a higher interest rate, no big deal, right? It's a short-term loan. But when you're doing anything that's about long-term wealth and cash flow, interest rate is so important. And the last thing you want anyone doing is tricking you into thinking you're getting a better interest rate than you are. So if you ever see yield spread premium, stop dead in your tracks with the closing and ask to make sure that the mortgage documents are what you were quoted, because that's the first indicator that, well, wait a second, the mortgage broker is getting paid more for me to pay more. And we don't want to pay more when it comes to a long-term hold, because the amount of money we'll end up paying over 30 years it's insane. Now that you know how to get financing for your multifamily property, let's help you understand how to find the right property, how to manage it, and what major pitfalls to avoid. I made a whole series of videos that go deeper into each of those topics. So click the video that's on your screen right now, and I'll see you there.